interesting spot to go on a little rant. We'll see if I can tee you up. Has the old wall gotten smarter this cycle? I don't recall them talking about leading indicators like the ISM and credit spreads back in '07, but now they are. Where are you guys on recession?
Well, hopefully, of course, across the path of human history, we're always getting smarter. So the first part of the question is, I hope so. I mean, if you're just like willfully blind or I don't know what else you'd call it, but there are plenty of sources, including us, that are freemium channels of content where you can learn and improve your process. So people that are starting to use rate of change or using real leading indicators, of course, there's going to be more people doing that because they can see that what's working is based on those models. On the second point, what was the second question? About the recession?
Yeah.
We already have a global recession in industrial growth. I mean, just look at the update from South Korea this morning, or Taiwan for that matter, on that economic data. So that's an easy call to make at this point. It's no longer debatable.
Yeah.
We have an industrial recession. We have certain countries in recession. We have parts of the U.S. economy in recession. I believe last week we got factory orders in recessionary.
Factory orders, durable goods, the negative year over year.
Yep. So there are components of it, and what you'll see is if you get your money manager, or you yourself, if you're the money manager, were to decompose your portfolio across sectors and factor exposures, you'll find the recessionary impact. And you'll also find that certainly for us on the long only side, there is only recessionary fears that is generating our returns. So I mean, we're good with that too. Or growth slowing. You don't have to have a recession to generate returns, obviously, in gold, treasuries, utilities, REITs. You know that now. If you didn't know that, now you know. If you have some dumbass broker telling you that throughout the day that, unless we have a recession, blah, 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 blah. Well, those are the guys that aren't long all those things, because you don't have to have a recession. You just have to have rate of change of growth slowing, and we're currently below 2% for GDP for the first time in a long time on headline. When's that number coming out, by the way?
26. That's on Friday.
Oh, on Friday of this week, you're going to get that news, if you will.
Yep. And then, just on recession, on that point, just to make one final point on that as well. You don't need, recessions are very rare, obviously. We've only had 3 in the last 30-something years. What you do need to know is you go into quad 3 on the way into recession, and you bottom out in quad 4. Your playbook and your exposures and the different asset allocation shifts you should have into and through a recession will be right in line with how our process is set up. You don't need to actually call for the recession. You just need to know that we're either in quad 3 or quad 4, and the playbook should be. You should have that asset allocation.
Yeah, that's a much better way to say it than I did, which is know what quad you're in.
Yeah, just know what quad you're in.
If you're in a quad 4 recession, you're in a quad 4 recession. If you're in a quad 4 non-recession, you're in a quad 4 non-recession. Yeah. It doesn't matter. We wouldn't change what we're doing.
Yeah.
Whereas most of Wall Street is like, unless it's a recession, we are not concerned. So great. Let them think that. God willing, they're going to continue to do that and fund some vacations.